Good morning, everybody. It's the 7th of December. We are Signal Centre Talking Ball. I'm Joe, joined by Steve this morning. How you doing, Steve?
Very well, thank you. All good.
Good, good. Interesting matches in the World Cup yesterday. Good to see the old Spaniards on their way out.
Yeah, yeah. I think. Did you see the tweet? The elf on the shelf, and then it showed you the Spanish football team on a Ryanair jet.
No, I didn't see that.
And that was Spain on the plane.
Love it.
So yeah,
Okay, cool. Right, let's stop the football chat then and get on with the latest headlines, shall we? Let's have a look. So um, that is not the one I wanted, or is it? No,
what's
it's
that?
not. I've got the wrong headlines on here.
Oh, is that yesterday's headlines?
Yeah, it is yesterday's headline. So I haven't got time to change it now, so I'll
Oh
just
no.
reel them
Well,
off.
yeah, I can bring him up.
All
Yeah,
right, it's fine.
I can bring him up while you chat about it.
That's okay. So, weak Chinese data yesterday. China's November trade data was weaker than expected, with exports declining 8.7% over the year, while imports posted a 10.6% contraction, reinforcing unease surrounding domestic and global economic trends. We also had confirmation of further coronavirus easing in China. They announced on Wednesday there would be a notable easing of the coronavirus restrictions, including wider use of home quarantine and a move away from quarantine camps. There will be a press conference just after the European Open with a further easing of restrictions expected. Risk appetite still shrugged this off really, and didn't seem to make much of an impact, probably already priced in. In terms of the US equities yesterday, as a result of this, we saw them lost ground with concerns over the Federal Reserve that they would maintain tighter monetary policy for longer in order to combat stubborn inflation in the services sector. The oil price slid quite dramatic yesterday as well. We saw sharp losses across the board, with markets fretting over the risk of weak global demand conditions. International benchmarks hit fresh 11-month lows before a tepid bounce. The dollar secured gains yesterday. Overall, it made some headway over the past 24 hours with weaker risk conditions underpinning the US currency on defensive grounds. And the UK construction numbers are in the doldrums. We saw the index for the PMI construction dip to 50.4 for November from a previous reading of 53.2 and below this consensus forecast of 52. Although there was a small increase in new orders, but overall, price pressures eased on the month, but remained elevated in historic terms. So today we've got the Bank of Canada rate decision due. They will announce their latest interest rate decision on Wednesday. Consensus forecasts are for a further 50 basis point rate hike to 4.25%, but sizable minority expect a smaller hike of only 25 basis points. So we'll wait and see what happens there. Okay, that's that. Steve, do you want to crack on with some charts for us?
Yeah, I'll share my screen now. Right, we're looking at Bitcoin to start off with, and the resistance has held. The resistance, if no one's been watching over the last few days, my dogs want to come in and watch, is this band of resistance that we've had all the way up to 17,300. And it starts around about 16,800, so a nice like 500 point band of resistance here. We did spike through it on Monday, but then posted a shooting star. Let's make it a bit bigger so you can see it. And yesterday's price action engulfed all of the previous week's price action and has moved lower. Today's rather. We are currently trading below that level of resistance. So on the back foot as we enter the morning. It's only happened over the last hour. We can see on this hourly chart, we've broken through this support here. I suppose this, we could say the hourly chart support comes in around about here. And we're broken through it. So yeah, back foot this morning. Levels to watch, really. We've got support coming in at 16,723. This is from the swing low from the 6 o'clock candle on Wednesday, the 30th. Now, a break of there should have a really fast move to the downside. So that could be an ideal trade for gun to head. Be very sort of like, as we know, we sort of like the stop may not be in the ideal level if you want to get the reward out of this trade. A move down to 16,500 is expected if we break that 16,724. Taking a look at gold, gold steadied a little bit yesterday. We can see we had the evening doji star formation or evening star formation or evening hanging man formation, probably that's what it's more likely to be called, right down to the pivotal level. We highlighted this pivotal level the other week between 1765, 1770. If we look back historically, it's always been a point of contention between bulls and bears. Really, with this formation here, this is the overriding formation. We've got the 200-day moving average, the really solid resistance up above 1800 to 1810. We do expect this downward move to continue. So really looking for a break of 1765 and a move back down to the 1730 to 35 support level in gold. Looking at silver, we've got the bearish outside candle from Monday's price action. Further negative price action yesterday. However, we're on the little bit the front foot this morning. Again, we've got a band of resistance that we're trading within. We've broken through it. Are we retesting for the move higher? We've got an inverse head and shoulders that we're really looking at here. That's got a measured move target all the way up to 24.92. However, this bearish outside candle has put a stop to that move currently. Copper, again, that shied away from a test of the 200-day moving average on Monday. Slightly better price action yesterday, but today we're on the back foot. We're looking at levels of support coming in, well, almost a band of supports, 374 all the way up to 377. And again, we'll have that really fast, aggressive move lower, where there'll be some sort of vacuum between there and 368. But really the main support all the way down at 355. That's the one to watch. It's got the 55 and the 100-day moving average have crossed over, and that's a positive sign. But and two swing lows around that level, and also the Ichimoku cloud around that level. So plenty of reasons to buy, and we've got this upward trending potential support line as well. That's down today, is down at 335. So a little bit of support there for copper. Really need to clear the 396 or the $4 level and close above there on a daily basis or a weekly basis to really continue this potential double bottom. Crude oil, we are on the back foot again. We've stalled at the previous swing low, which we saw last Monday the 28th, and we got down there yesterday. That's the low is 73.50. I think we'll look at Brent in a minute. I did see it broke $80 to the downside. So let's have a look at this first. 73.50, the level of support. A break below there, and next real level of support is all the way down at 61.50. So potential, obviously we haven't broken it yet, so we're holding on. This is a little bit how I played the natural gas yesterday, if you remember, and it seems to be, natural gas seems to be working, although I didn't make any profit yesterday. But anyway, yes, lowest prices since all the way back at the start of the year. So almost taken out. That the low of the year is 76.85. We've got down to 78.75. So another $2 to the downside would have created a brand new low for the year. And if you think about charts, just like knowing that, take it to a 12-month chart, that'll give us a big shooting star candle. So let me just get this chart up. We haven't got like years and years of, well, it goes back to 1988, so we have got years of price action. But that is a horrendously bearish candle, shooting star on the yearly chart. How's that grab you?
Don't think I've seen one of them before.
No.
To be honest, I don't look at yearly charts, but that is pretty mega, isn't it?
That's a gravestone doji, isn't it?
Yeah.
I think
Death
it is.
of oil.
So, yeah, that could be the death of oil. Let's get them electric cars going, which are powered by electricity, which is powered by oil and coal and all the other stuff.
Does that mean these protesters can stop protesting now as well?
Oh, let's hope so. Natural gas on the 12-month looks very similar. It is like a clear rejection of that $10 move all the way back halfway down. So as we said yesterday, I think we were looking at a measured move for the head and shoulders formation, and it was down to about 86 cents, wasn't it?
Yeah,
So yeah, natural gas yesterday did have the reaction higher. That's what I was looking at on the gun to head, but we'll cover it in a minute. But as you see, didn't quite get stopped out, but closed offside, and it's having that move again. So I quite like the shape this is taking. It does feel a little bit of a bottoming formation. However, the last hour we've seen a bit of a shooting star there, so be wary of that. Yeah, I think that's it. I've covered that. Let's take a look at dollar, which I presume has had a little bit of a lift from yesterday.
yeah, absolutely. So yeah, dollar chart on the screen now. This is the daily. Talked about this head and shoulders top, which was forming. I would have sort of bet on that moving lower following the break of the neckline, but we still found some support around these swing lows from back in August, and prices kind of held around that level, and we saw a bit of positive price action. So really we're seeing money go back into the US dollar because there are concerns, elsewhere in the economy that are impacting that. We do have this gap lower that we saw back on between Wednesday and Thursday last week, so maybe in the process of trying to fill that. But yeah, for me, it's on the front foot at the minute. It's gapped higher today as well. So we're back kind of above that neckline of the head and shoulders top pattern. But I'm not giving up on this yet. I think I would only really give up on it if we saw a break above the right shoulder, because that would invalidate the kind of pattern for the time being. But there's no reason why that couldn't evolve into maybe a bigger right shoulder over time. But for the time being, it is on the front foot, and yeah, I think gains will be limited if I'm totally honest. And I would be probably looking to sell into around 106.80, which is these kind of around these highs that we posted between Tuesday and Thursday last week. So yeah, dollar is on the front foot, and of course that will be impacting other majors. We can see here with euro US dollar following the break from this consolidation pattern or continuation pattern that we posted on the daily chart, we came up just shy of this 38.2% fib level at 106.10, and just shy of the measured move of this bottom pattern that I'd got drawn on my charts as well. But we saw this candle here, which was a pretty bearish one, indicating that prices may have formed a short-term top, and that was a pretty strong reversal candle there, and we have seen prices continue to decline. But we do have support fairly close by. We've got a dotted line on there, which is where our analysts are looking to buy euro US dollar today. That's at around 103.88, and I'd kind of go along with that actually. 103.90 is the entry that we're looking for on euro US dollar. So I still think it's a case of buying dips there. And yeah, let's continue to play the uptrend while it's still visible on the charts. Let's take a look at cable. Sterling dollar, we can see that rallied into a big level here, a 50% Fibonacci retracement level, also some previous highs from back here in August, and we saw a bit of a rejection from that point. So prices dipping lower, again looking to buy dips. We've got a support here at 120.30, which I think could provide a nice opportunity for fresh longs to be initiated, eventually looking for a break above these resistance levels at 122.98, and then start maybe heading higher towards this 61.8% fib level. Let's take a look at Aussie dollar. Very choppy here. So we saw a break of the downtrend. We saw a completion of an inverse head and shoulders. We look to be forming some sort of consolidation / continuation pattern. We saw a breakout above that on Thursday last week before a pretty sharp reversal. So prices back within the consolidation pattern for now. Yesterday we posted losses. We tried to rally but failed, and now we're potentially on the verge of breaking down to the downside of this triangle pattern that we've got on the chart. So that may indicate lower prices. And if we do get a pullback, it may only be that we pull back to the neckline of this head and shoulders bottom, because we haven't really seen a retest of that. It'll be interesting to see what, if any, kind of reaction we get around 65.22. If we see prices holding up, then that could indicate that we have formed a bottom, and we will continue to see higher prices, but it won't be that straightforward, as we obviously seen this chop period at the moment that we're in. Let's take a look at New Zealand dollar, US dollar. So that's trading in a pretty decent looking uptrend. We did see a rejection at the top end of the channel, and prices yesterday didn't do an awful lot. We formed a doji candle, and we are higher today, up by 0.26% as things stand. So again, looking for pullbacks to be quite limited and probably present opportunities to buy. Looking really for a pullback maybe today to around 62.53. And I think in that kind of region, I would be a buyer of New Zealand dollar versus the US dollar. Dollar CAD, this will be an interesting one today because we've got the Bank of Canada coming out with an interest rate decision. Talk of it being less than maybe the initial market reaction, or the initial what the market expected it to be. So we're talking about maybe quarter of a percent. But this is pushing to the upside quite nicely. So obviously quite a lot of weakness in the Canadian dollar ahead of this announcement later today. We took out some resistance yesterday, this previous swing high that we posted on Tuesday, the 29th of November. We closed above that and we're trying to push higher again. So it's doing its best to really invalidate this really neat head and shoulders top pattern that we saw break down back in early November. So maybe need to give up on that. I will wait and see what happens today with the policy announcement, and then maybe do a redraw of this tomorrow. But it certainly looks pretty bullish, and at the moment looks set maybe to go and challenge these highs up here at around 138.37. Dollar Swiss, so this is trading in a bit of a triangle pattern, a descending kind of wedge formation as it stands. We do have major support around 93.70. So while that continues to hold, I still think I'm of the opinion that I want to be buying this at the moment. But if it starts to break down and we see a close below the trend line, a close below the 93.70 level, then maybe we can start thinking about lower prices on that. But it's a very undecided at the moment. And if we take a look at dollar yen, we can see a pretty impressive bounce back on this. It did look like it was breaking down through some significant supports. 135.58 was the latest level, but we've rallied back above that pretty sharply and now into some interesting resistance levels. So we've got these swing lows here from the 15th of November. We saw it again on the 28th, and then finally on the 30th before we then saw the breakdown. So we're into a retesting of these levels at the moment. So that could present maybe an opportunity to get short on dollar yen. So I'll come back to that in a moment. We have had a request to look at Aussie yen from one of our followers. So very happy to take a look at that. If anybody else wants us to look at charts, please feel free to post up on the streams or YouTube, wherever you're watching, and we'll do our best to cover them. So looking at Aussie yen. So looking first at the daily chart, just to give us an indication about where we think the overall trend is. Obviously, prices have been moving higher pretty much throughout 2022, but we may be in the process of forming some sort of top. It's not confirmed yet. It still needs to do a fair amount of work on the downside for that to play out. But I would suggest that maybe the overall trend is maybe starting to level off and maybe turn bearish. But we'd need to see, I think, a break below these lows here from the 13th of October, which come in at 90.83. But I think it's fair to trade on the downside with this at the moment. And let's take a look at the 4-hour chart, see if we can find any reason to do so. So this is actually the hourly chart, sorry. So we can see prices broke down through this key level of support here with a number of swing lows from the 28th of November and then again on the 29th. We broke down through these levels and now that's acting as a resistance on the reverse side. So if we draw some fib levels on, just going from this swing high move on the 30th of November down to these lows that we posted on the 4th of December, we've got a 38.2% fib level coming in at 92.14. So that kind of confirms that we've got a fairly large band of resistance here that needs to be overcome. So selling into this, I don't think is a terrible strategy. Maybe what I'd be interested in seeing, as you can see, I've got a moving average on the chart here. This is a 10-period exponential moving average. And for me, I always like to use this as a bit of a trigger for my trades because it kind of, gets you in the right sort of direction when you want to get involved in a trade. So I'd be looking for a close below the 10-period moving average. We can see here that when it's rallied into these levels previously, and then we've seen the close below the 10-period moving average, it tends to be a pretty good indicator at catching some decent momentum. So I'd be looking for maybe a close below that or some sort of reversal candle into these resistance levels before getting involved. But yeah, I would agree that looks pretty bearish in my opinion. But of course, if it breaks out above this high here, which is from the 6th of December, that's a high of 92.33, then I think that invalidates the bearish setup for the time being. Hopefully that was useful.
Cheers, Joe. I'm going to take a look at Dow first. Dow broke through the resistance that we formed from the swing high on the 16th of August and has been thrust back below it and looks really bearish. Last 4 days of price action, prices have closed lower, so lower highs, lower lows. Price action today hasn't really done a lot, so really looking at the support yesterday's low at 33,400 and probably looking at the high now as resistance of just above 34,000. Nasdaq 100 has also stalled and looks potential of forming a double top formation. You can see we'll place it on the daily chart. This high here, and high here, and the neckline for this would be a break of the support at 11,438. So watch out for that today. We're still in the cloud, so we expect decent volatility whilst we're in that resistance cloud. S&P though has the one that's formed the real decent withdrawal from the push higher. We've got 1, 2, 3, 4 major touch points. I know you said the other day, Joe, if you get 4 major touch points, that's a warning sign. So I'm not going to get. I'll take your word for that. I'm not going to get carried away and say this is like a clear reversal. But if we do get below 3,900, I would say that's held pretty well, and further downside is going to continue. I'm back on it, Joe. I'm back on the short DAX. I've sold DAX and don't know where I got in. I think it was up around 14,500 yesterday, and we've just broken the support level of this potential double top formation. So that has been confirmed to break below 14,317. So I'm getting very excited, obviously. My stop is just above where, well, it's exactly where I got stopped out last time at the high, 14,604. So actually, I've put it at 14,606 for all those big whales out there who want to try and stop me out. Have a go if you think you're hard enough. So yeah, I'm sort of on that. I'm short of this and think further downside. I think I was looking at this on a short-term basis for the gun to head, but maybe not. Maybe it wasn't this one. Doesn't look that great on the hourly chart for the bear move. So looking at the daily chart on FTSE, again, it stalled in front of the second major resistance band, and we're back in the first one. So this really turns into a bit of support. So we really, unless we break down below 7,500, which for me would be a little bit of a neckline to consider, then the exponential move, this really acute move higher, really needs to unwind, in my opinion. But there's plenty of support down below. 7,325 is the 200-day moving average, all the way down to the 55-day moving average, and the 100-day moving average is in between. 71.87 for the 55 and 72.73 for the 100 days. So that's about covers it off. Actually, no, I wanted to show you what was going on in China. Inverse head and shoulders, which was we highlighted the other day. Measured move target is way up at 14,436. However, we've stalled in front of the 200-day moving average, and we're posting a shooting star candle. So China and that area opening up, COVID restrictions being removed, but it doesn't seem to have translated into a positive story for the indices, which is what we talked about yesterday. Buy the rumor, sell the fact, and it seems to be really not taking it quite hard. Bearish outside candle after stalling in front of the 200-day moving average, so a really classic reversal from that serious moving average, and looking quite bearish this morning. So that inverse head and shoulders could be either retesting the neckline, maybe, or invalidating. If we manage to get below the horizontal part of that neckline between the head and the right shoulder at 18,467, then we enter another phase maybe of bearish territory. So yeah, plenty to get excited about, plenty going on. So let's see how that plays out during the day.
Yeah, very good. Okay, thank you, Steve. So let's take a look at the gun to the head trades from yesterday, shall we? So the gun to the head challenge is where Steve and I come up with trade ideas as if we had a gun to our head. What would we trade right now? So we're putting our necks on the line. We're saying, where do we think there is an opportunity right now? So it is just a bit of fun. But all in all, we're doing pretty well with the challenge overall. Each of the ideas that we come up with must have stops and targets. They're all placed at market, and we close the trades out at 9 p.m. UK time, or when the stops or the targets are hit. We post these up to our TradingView profile, so they're there for all to see. Check that out if you want to. It's signal_center. And we can take a look at yesterday's trade. So Steve was buying natural gas into a major level of support, as he highlighted yesterday and again today on the charts. Was looking for a decent bounce to come from that. And I think just because of obviously the timing of when we have to do these calls, I mean, ideally you would have obviously liked to buy it bang on the support level, but didn't get that opportunity yesterday. But come the close, I think he was offside maybe 0.59R on that yesterday, but it's had a really nice reaction from that support level today. So I think, it was certainly the right idea, just maybe the wrong time, but we can't do anything about that. And I was selling Aussie Swiss into a head and shoulders neckline as a retest. Also got a nice little close below the 10 period moving average, which I mentioned earlier is a favored method for getting on trades. We clicked the play button there, and I was 1.95R on side with that one, so that worked out really nicely. Didn't quite reach the target, but a win's a win. So we'll lock that one in and move on to new trades today. You got one ready, Steve?
It's not quite ready. So are
I haven't got
you?
anything.
You
So
haven't got anything, right?
no, we could just
Uh,
waffle for a little bit.
yeah. Okay. Well, the one that I was looking at is. Oh, it's just jumped down again now. It's going short. Like I did have it here, honestly. Is but I don't know where am I going to put my target? All the way down at 77. And the stop at getting short here, 79.53, stop at 80.53, and the target is at 76.53. 3-to-1 risk reward. Selling Brent crude oil, just
Oil
because of
inventories
this.
today.
Yeah, oil inventories today, a little bit of price action. You know what it's like. We love it. We love all that volatility. A bit of a
Indeed.
bearish flag on there. That's what I'm looking at. A break of the bearish flag. Stop is above it, so it should give it a little bit of room. But oil inventories could go anywhere. So
Yeah.
watching that closely.
Okay, cool. Right, I'm going to take a look at Bitcoin. I haven't traded this for ages, but I'm going to give it a go. So this is the daily chart. Obviously, Steve went into much more depth than I'm going to go into on his views on Bitcoin at the moment. But my own charts, I've got a resistance line at 17,567. We seem to be coming up just short of that. Looking at price action in the last few days, really not going anywhere at all. But we have started to see maybe a little bit of a drop in Bitcoin, which may trigger further losses back towards these major supports around 15,500. Looking at it on the hourly chart, we can see that sort of pattern of candles that we had on the daily, all very tight, but potentially breaking down now through a top pattern, completing some sort of head and shoulders top, maybe on the hourly. Ideally, I'd like to sell into a retest of this level, which is at 16,855, but I've got a gun to my head, so I've got to go now. So I'm going to set it at the current price of 16,783. The measured move of this top pattern comes in at 16,306, so that's going to be my target. And I'm going to place a stop just above the breakdown candle. So when we saw this big impulsive move through the support level, I'm going to go just above that, give myself a little bit of protection. That's at 16,969, giving me a risk reward ratio of 2.55 R. So going to get that published up. Anybody who wants to follow it, feel free to do so. Okay, data-wise today, a couple of bits on the calendar. Again, I haven't done this, so I really apologise. I forgot to get that done. So later today, we've got the Bank of Canada policy decision. That's at 3 o'clock UK time. So expectations are for an increase of 50 basis points, taking the overall rate to 4.25. But there is a minority of people that believe a smaller hike could be seen of 25 basis points. So this is when you can tend to get the big volatile moves as a result of these kind of indecision or split decisions on where they think price will go. It feels like the market's pricing in 50 basis points, but obviously it comes in with a 25. Then we could see some pretty sharp reactions on that. 3:30 UK time, we've got the US EIA crude oil inventory numbers. So Steve's trading oil and he's gone to the head trade today. So that could
I just got
certainly
a kiss from
impact
the
things.
lovely Mrs. O'Hare. Did you see that?
I didn't know, but I wish I
All
did. I
right,
was
we'll have to rewind it and just show it on
yeah.
live and then just freeze frame it there.
Rest of the week, we've got US consumer prices due out. Actually, that's not until next week, so we won't talk about that. We'll leave it there for today. Okay, that's it, Steve, I think.
Well, when's your annual review, Joe? Because you've really let the side down today with your Google slides.
Yeah, I know. Sorry, I blame the I blame the beers I had last night.
Blame Portugal winning 6-1 last night.
Yeah, absolutely. Okay, thanks for watching, everybody. We'll be back tomorrow morning, and until then, trade safe.
Cheers.
Bye.